Welcome to the Movers Resource Guide podcast, connecting you to the resources you need to create success. We chat with the best vendors, associations, mentors, movers, and more, giving you the information you need to make your moving company the best it can be. I'm your host, Brian Hassan, CEO of Wayfinder Moving in Buffalo, New York, Apex Moving in Lakewood, Washington, and the president of the New York State Movers Association. Today, our guest is Brock Hartzler from ProMover Accounting. Brock and ProMover work only with moving companies on their accounting, and so they have some really great insight into our industry and what we should be doing as moving companies to help our numbers. We talk about margins, controlling your overhead, some struggles that he typically sees movers have, and something he thinks movers should be doing on a regular basis. So I think it's a great topic. It's very timely. We just hit the new year. So, it's time to dig into our numbers, look at controlling our overhead, and help guide us through the slow times. And just a note, if you're enjoying this podcast on YouTube and you can't always watch the video or have time to keep the browser window open, we are on wherever people listen to podcasts, whether that's Apple Podcasts, Podbean, wherever it is. Just know that option's available to you if you're looking for it. But with that, I'd like to send it over to the conversation with Brock and I. All right, Brock, welcome to the Movers Resource Guide podcast. Glad you could join us. Really excited that you're here. Thank you for being here. How are you doing today?
Yeah, good. Oh, I'm doing good, man. It's been a little while. We saw each other in New York. It was the last time I think we saw each other. So yeah, it's going great. We, yesterday, my wife and I announced we're having a second little baby.
I saw that on Facebook. Congratulations.
Yeah,
what a great way to start that out. That's really exciting there.
Yeah, it is. We're super pumped, and life keeps on moving, doesn't it?
That sure does. Yeah. I've got 3 and life is wild. So
yeah, you can imagine. Yeah.
No, that's awesome. So how old's your first?
Yeah, my first one is 2.5.
Okay.
And so my oldest now is her name's Emerson, and her birthday's in June. My wife's birthday's in June, and this little one's birthday is going to be in June. So I'm outnumbered as a November birthday. But
that's right.
That's all right.
June's going to be a full month for you. That's awesome.
It's going to be a full month. But super excited about it.
Oh, awesome! Congratulations, man. That's fantastic. Yeah.
Thank you. Yeah.
So, we wanted to bring you on. I think that, being that you guys do accounting work for only moving companies, it gives you a lot of really great insight into what's happening broad stroke with most moving companies or the average moving company. And, so there's a lot we could probably get into, but being that it's, we just passed the new year here. And this is the time where we're planning and budgeting and trying to figure out what's going to happen for the next year. And not only seasonally is this a tight financial time for a moving company, but economically it is on top of that too. So I think there's a lot of moving companies that are reassessing their margins and their overhead and all of those things. So I think maybe a way we could kick this off is, when we look at our margins in a moving company, what are goals? What do you see the good moving companies? Where are they at with some of that stuff?
Yeah. What I generally see whenever we're talking to moving company owners is a lot of times they look at their best month and they'll say, okay, this is my target, right? This is what I want to shoot for, which is great. A lot of times it's August, July, September, somewhere around that, somewhere where the sales are easily there. The problem is that is not indicative of the whole year, right? I mean, that's the perfect scenario when sales are high. You're potentially getting leads from maybe you're not even the first company that people are calling, but other people aren't answering the phones, right? Which is not the same way whenever it's the winter time now, and the jobs are a little harder to come by. So a lot of times what I'll see is clients will want to duplicate that. And so instantly they say, I need to increase my sales. That's going to solve my problems is increasing my sales. And whilst, a lot of sales can cover a multitude of sins, it's
Sure.
oftentimes not like the best target. Focusing on overhead is vastly more beneficial all year long than just focusing on increasing sales.
And I think it's easy for movers to fall into the trap and include me in that group where it's very easy to focus on revenue and revenue growth. And revenue growth can be very costly. It's more trucks, it's more people, it's to not just field workers, but overhead staff. It's more a larger advertising budget, and those expenses creep very quickly and get out of hand very quickly. I've always, a couple of my friends pick on me, like, your problem is always to sell yourself out of that problem to like more revenue. But I've slowly been learning that it's not always the right solution, right? So
no, it's not. And even in the busy season when the revenue is to be had, most of the time people sacrifice margins. You're renting trucks generally at higher rates because the demand's higher, right? You're getting movers that you're probably paying more than your W-2 movers. You're just trying to get day labor because you have 5 times more sales in June than you do in January, and so your business isn't structured to run that way. Whereas really, you should structure your business to run how it's going to run in the slow seasons, and then when it gets into that really sales gluttonous season, now your margins just skyrocket and you're making money on the top, right?
So let's take a step back on that. So if we were to look at, and we'll get into what is included in this in a second, but if we were to look at our costs of doing business to do the work. So if we're in a manufacturing environment, our costs of goods sold. So directly what it costs, what should we be looking for that margin to be?
Yeah. So a lot of times you'll kind of hear something that's flat across the board. At ProMover, we adjust it pretty much every year. So we look at last year, we take a lot of our moving companies, we throw out a lot of them if we think that, like, for example, if there's a moving company that does a lot of van line, we'll take that out of the equation, right? If they do a lot of commercial, we'll take that out of the equation. We'll look at a residential moving company, okay? And from that, we're able to kind of say, okay, direct costs should be this, direct labor should be this, how much should your total sales staff cost, things like that, right? So I am finishing up some of the metrics from the 2023 year. And really where I'm landing is I'm happy with a gross profit of just a little under 50%. Now, the problem is you get into some gray water whenever you start talking about what gross profit margin should be, because gross profit margin is only an accounting number. I can make gross profit margin skew however I want by just moving line items around, right?
Yeah.
So for us and how we do our accounting with the companies that we serve, we want to shoot between a 45 and a 50% gross profit margin. That's where we want to live.
So I think there's some things that we can readily agree that should be in that number, and then maybe there's some things that are in the gray where people don't. Where opinions can differ. But I think the things that we can absolutely agree on is direct labor, fuel, material costs such as, cartons, stuff like that. I think those are the 3 that are pretty universal. Nobody's going to combat that.
You're right.
Are those the things that ProMover uses, or do you add in things such as claims or vehicle repairs and things like that? What goes into your number?
Yeah, to get specific, we don't include vehicle repair, and this is where I don't know if you know the name Tracy Beck, but we conversed about this. We do not include vehicle repair. We do include truck lease and rents, right? And you start to get unique when you start talking about vehicles, because the P&L is vastly going to be different whether you own a vehicle or whether you lease it, right?
Yeah.
And so because of that, and because of how we do our analysis, we do put truck lease and rents in indirect costs. We talked about direct labor. Something else that we put in there, fuel, you said, absolutely. Valuation and damages, we do, yes.
Mm-hmm.
Something else that we do put in there is, and this is a change that we implemented for 2023, is we do put the cost of sales staff. And the reason that we did that is because most every company, a majority of their sales are their sales accumulation is paid out with some sort of commission.
Yeah.
And because of that, we can easily consider it a direct cost, especially with, MoveBees is really ramping things up. We have a lot of clients that are using MoveBees, which is for people who don't know, it's an outsourced call center. And because of that, it's very much direct costs. But we can't put that as a cost of goods sold, but sales staff as an operational expense, right? We have to group them together. So because of that, we put sales staff in cost of goods sold.
And one of the things is things clamp down here and we're trying to lower our overhead, we're doing a break-even analysis, right? And so part of that's where, okay, here's my overhead expenses. And that sales is like, well, here's his draw, but what his sales is higher than that. Should that be, how do I want to quantify that? So it's, like you said, it can be difficult, but the important part is to know that, these are the types of things you can put in your cost of goods sold or to find your margins there. And we want that margin probably push to at least 50%. But if you're in that 45 to 50% range, you're in line then.
You're in line. You're in line. As long as your accounting's in line, you're in line. And you mentioned it, break-even analysis. Being at the beginning of the year, break-even analysis, budgeting, cash flow forecasting, that is a necessity. And break-even analysis is only going to be as accurate as your allocation of overhead cost. So if you don't have cost of goods sold, or your overhead cost includes things that are direct costs, it's the more fluctuation your overhead cost has month to month, the less accurate your break-even analysis is going to be. Yeah. So the accounting's got to be right for sure.
and it's tough. It can be a moving target a lot of times, and maybe you can speak to this too, is as I'm going through some of these exercises, it's like, okay, this is never going to be perfect, but if I can at least get close, it kind of guides me towards, okay, here's, what my break even is. And all right, here's what I have to reach towards. So there's something I want to get to that I feel the New York State movers, it hit me right between the eyes because I'm always the guy that's pushing to grow. I'm growth oriented. It's part of who I am. I've always got to be pushing to the next thing, whether that's more business, a different line, whatever it is. Like I'm a forward thinking, like I don't like sitting put, right? So it just naturally leads me to push for growth and all these things. Also gets me in trouble because, let's do that advertising. Yeah, we need another truck. Yeah, let's do this. And all of a sudden my expenses have crept. And I just became immune to the fact, well, we're just going to lose money in the winter. Every moving company loses money in the winter. Just the way it happens, right? And then we make it up in the summer. And I would say that that's true for the majority of moving companies, but it's not true for all. And I think it doesn't have to be true, right? So what's your philosophy that you can share with everybody about, okay, where do we sit our overhead? Where do we cap our overhead expenses? What do we not allow them to exceed so that we have the best opportunity to be successful?
I've got a lot of great comments from that New York Moving Conference, because something that I mentioned that I don't think a lot of people understood is I recommend when you're thinking about your overhead cost, you should shoot to keep your overhead the same as it is in your smallest sales month. Let's say it's January, okay? If you can keep your overhead what it is in January, why can you not keep it the same in July, right? And sometimes that's not perfectly feasible. I
Sure.
totally agree with that. But that should be our direction. And if your overhead cost is truly your overhead cost, then it should be that way. And so if you're building out how your operations is working from a financial perspective, you need to be looking at January and say, okay, how do I at least break even in January, if not just make a little bit? I don't want to go negative. How do I
Yeah.
make sure that my structure is so that when I produce whatever sales I'm producing in January, which is generally not much than the other months, how do I still stay profitable, right?
Yeah.
And a lot of people don't think that way. They're looking at July and they're saying, as long as I'm profitable in July, I just need to make enough money so that I can weather the winter.
You got to make enough in the summer to offset the losses in the winter.
Yeah,
And,
it's not a real sustainable, plan,
it's
right?
no, and it's also depressing.
Yeah.
It's because you're basically redlining your money throughout the winter and you're redlining your time throughout the summer. So you're just burning that candle at both ends, where you're just burning yourself out in the summer because you have to push as hard as you possibly can so that you can survive in the winter, and which is also burning you out because you're stressed about, making ends meet and all that. So
For sure. And something I say too, that this is perfect. January is the time where you can kind of sit back and do your growth, right? Continue to do your growth, but don't do it in a sales oriented way. Do it in a break even sort of way. Like, where in the world can I do this analysis to be able to say, okay, when I am making more money, right? I'm capitalizing. So for example, can you start building out you would be amazed at how many companies don't do this. Can we start looking at our marketing ROI and our how our salesmen are performing when we're losing jobs? Why are we losing them? If you can start looking at all that data, then you can start to say, okay, in July, when I potentially could increase my sales 400% from January, right? Which is actually kind of
not
normal,
uncommon.
sadly
Yeah.
enough. Definitely not uncommon. If I can do that, then how much better would it be for me to try to just slightly increase my number of jobs, make sure my guys are all busy, but just increase my rate, right?
Yeah.
And now you're just making higher gross profit on the jobs that you are doing, and it's not making you stress at night. You're not having to add a whole bunch of rental trucks and a whole bunch of guys you're not familiar with. You keep running your business how it should be run, just substantially more profitable, right?
Yeah.
That's the analysis that should be done at the beginning of the year.
And I don't think that movers are really good about supply and demand pricing. We need to start moving more towards like hotels and airlines where, and some of the tariffs and regulations make this difficult, but we're 75% full. We can increase our prices by 20% or whatever that number is. And like you said, really help those margins.
You're 100% right.
And reduce the amount of work that you're trying to do in the summer, so you don't need as much equipment that you're carrying throughout the winter, but you're still creating that profitability, right?
Absolutely. And it seems to make I only have a couple of movers that think with that mindset, but it massively increases profitability. It massively reduces stress because it's not like you're changing that drastically much. I mean, maybe everybody's got a full schedule plus some, but it's much better than hiring people you're not familiar with, right?
Yeah.
And you're making money.
And that's the end goal, right?
That's the end goal. That's the end goal. The other piece too is so many moving companies, if they're looking to set their rates, obviously tariffs can limit us. I understand that. But how many of us have called the moving company down the street to try to get what their hourly prices are per guy, right?
Yeah.
And so I just don't think that that's a sustainable way to run your moving company, because if that's the case, you are leaving money on the table in the busy seasons when you're just increasing volume. You absolutely are. Yeah. So can we look to keep the sales, the job numbers and the job hours roughly even throughout the year, and we just get to capitalize on high margins in the summer? That's the end goal.
Yeah, I think not a lot of moving company owners think that way, and it's hard because you're just like, no, I need all the jobs, right? So
yeah.
But I want to steer this back, since we're in winter, and what are different ways that you see companies, or you suggest that we could look at controlling our overhead? to allow that to stop creeping, and how we can really hold that ceiling down to our worst month or our worst couple of months.
Yeah, yeah. Well, a lot of it starts with just having a lean operation from the beginning, right? Something that's really difficult. I see it a ton, and I understand, but something that I see quite often is in the winter, you're putting 3 guys on a 2-man job just to be able to keep the staff going, right?
Yeah.
Well, some of the problem is maybe you wouldn't need all that staff in the summer if you weren't trying to scale your sales so high, right?
Yeah.
If you have 40 guys and you can keep 40 guys busy in the winter, but you need 80 guys in the summer, can you scale down to 40 guys, have core 40 guys that you're keeping busy 40 hours a week, if not more in the summer, all year long? And the guys you definitely want, keep those guys, right? Get rid of the ones that are troublemakers. And now you're talking high margins, and you're talking massively increased margins during the slow season, because you're not having now to put 3 guys on a 2-man job just to keep them busy, right?
Right. Yeah. And
That's
your quality is going to increase too, because you're not going to have those service failures that
Absolutely.
because of hiring whoever you can find in the summer, right? So,
Absolutely. That's a big one. And just really getting lean, looking at your operation and figuring out, do I need these expenditures? Do I have more? I mean, you can go through every line item. Sometimes, especially with our CFO clients, we'll do an exercise once a year where we actually go through the P&L line by line, and we say, all right, is this actually an expenditure that we need? Can we reduce it $100 a month?
Yeah.
Okay, that might seem like not much, but over the course of 5 years, it adds up, and that's just net income, right?
Yeah.
Going through your P&L line by line is massively important.
So when you're doing that, and so it was a great conversation, because we've gone through this exercise, and I have our break-even analysis on a spreadsheet, and I have all of my fixed costs that are in there, and whether that be trucks, people, suppliers, whatever. And so I look through that list, and I'm like, okay, what's jumping out at me? What doesn't need to be here? And so we've had to make some cuts of things. We look down through that list, and like you said, do I need it, or can I live without it? And will it hurt me long term if I cut this now? And so that's usually where I look at it. Like, yes, if this is a 3-month gain, but a 12-month, it's going to hurt our company or set us back. Like, I don't want to cut that one. But if I can cut it now and it doesn't hurt us long term, or I can go back to it later, we look at those things.
Sure.
And go ahead. No, go ahead.
Well, I was just going to plug right in there. That's fantastic that you said that. So often, moving company owners are the greatest breed, because they are salesmen to the core, they're operations management to the core, and they go hard. And I love it, right?
Yeah.
The trouble that gets us into is, for example, you're looking to get a warehouse, you're going to do some storage, okay? You can, right now, maybe you only need 1,000 square feet, but you're thinking of growing, and there's an 8,000 square foot warehouse for lease, and you're like, in a couple of years, I'm going to have this thing filled up. Okay, well, it's a good mindset. The problem is, at least for the next year, you are paying for 7,000 square feet of warehouse that you're not using, right?
Yeah.
And so growth is really expensive. So I more want to think strategically and say, like you just said, am I going to need it in 12 months? Well, no, maybe I'm only going to need 2,000 square feet in 12 months. Then let's go that route. Get a 2-3 year lease or whatever, and then we can, upgrade later. But for the next couple of years, if I upgrade to $8,000 or 8,000 square feet right now, I am paying overhead for something I'm not using. So yeah, you're right. That's the analysis that needs performed.
Yeah. And we've done that, and we've gone through, and there's been some things I've been surprised about. Like, I always complain about how expensive our payroll processing is, but we've never done anything about it. So we're like, okay, well, that number doesn't seem right. Let's shop around. And we've found we can save like $500-600 a month on payroll processing.
Wow. And
so we've just gone through line item by line item. Do we need it? Do we need to look at our phone system or not? Do we, there's certain things like your fuel costs, your utilities, like certain things, it's not much you can do about, but, controlling that overhead, and especially now in January, now's the time to look at those things and say, okay, What can we trim?
Yeah.
What can we, and that's going to make you, it's not going to help you just over the winter, but it's going to help keep you healthier year round and hopefully give you a little bit more of a nest egg come next winter. Yeah.
You're 100% right. You're 100%
So,
right. And I think you're right. You need to be looking at that stuff yearly. And if you can save first off, $500 a month is big.
yeah.
I'm happy to save like $20 a month on a subscription, right? And so if you can save $500 a month, then how much has it costed you to not make that change? Right?
Do we have to talk about that, Brock?
Yes. Yes.
What's really interesting
you're right.
is I'm surprised at how much money I have been able to save by going through that exercise.
Awesome.
There's so many of those creeping expenses that have happened that, we're talking in the last couple of months, we've been able to trim thousands of dollars off of what we're paying just because, hey, we don't really need this anymore, or we're not utilizing this to its full extent, or maybe we could bargain shop a little bit, whatever that is. And I've been very surprised at how much we've been able to work on that. So,
yeah.
All right. So
awesome.
We're a little about halfway or so here.
I figured we'd get talking and we're going to have an issue.
Yeah, a little past halfway, but that's okay. We got some of the meat and potatoes done here. So, so now's the time where it's time to share a funny story. So you're not necessarily a mover directly, but hopefully you got something to bring to the table here for us.
That's funny. I was when you mentioned, hey, we'll be talking about a funny story. I had one pop right into my head, and and it's actually with me and a bookkeeper of mine that we have. So there was a client that we had. We've had him for quite a while now. Usually we would have conversations with his wife. And so we're sending requests, we're sending things to his wife, and there was a little delay in receiving some of the information. A lot of times we'll call, text, email, whatever, and there was a little bit of delay in the information we were receiving back. And then we got an email from the husband apologizing for the delay, and he said, there was a death in the family, and we're like, oh, I'm sorry for your loss. Take your time. Not a problem. We'll when you get it to us, we'll produce your financials. We'll get you what you need, but take your time, right? Yeah. He got us what we needed. A few days later, we were following up because there was more things that he didn't get us, and he said, we were asking about the wife. Hey, can she get us this stuff? And then the husband responds and he says, hey, I'll do my best to get this. My wife is no longer with us, and I'm like, oh man, like this dude's wife passed away. Like, well, that's horrendous. So we were like, okay, let's look up, a place where we can send some flowers and just apologize for the time he's going through. And my director of financial reporting is kind of a PI kind of. And so she went online to look up this lady's death, and we couldn't find anything about it. And we're like, that's kind of interesting. And she gets on her Facebook, and here she's posting on Facebook. And we're like, wait, what? Well, here, she's no longer with us. Didn't mean she's dead. She's just not in the company anymore. So thank the Lord, we weren't sending flowers to this guy. He probably would have been like, what is going on? But
well, his choice of words after he had told you there was a death in the family.
The power of miscommunication. Yeah. Probably a poor choice of words. We didn't, end up telling him about that because
well, he knows now.
Probably would have been no, but we had a good laugh at it. Yeah. So
wow. Well, I appreciate the communication, like you said, is key, and lack thereof can bring out some situations.
Yeah. We had when we saw she was posting on Facebook, we had a pretty good laugh because at least she's okay. We're happy.
Right. Hey, she's fine. Yeah. That's what matters, right?
Yeah.
All right. Well, let's go from struggles in communication to struggles with moving companies. What do you see the moving companies that you work with? what do you see as the biggest struggles, whether that be the most difficult struggles they have or the most common struggle or mistake that you see with moving companies?
Yeah, and you had mentioned this is something that we talk about. I get a ton of people ask me that question, and I've narrowed it down to number one, they just don't know their numbers. They
Yeah.
can't even do a break even analysis. They can't do the analysis we're talking about because they don't have the right information to be able to do it.
Yeah.
So number one, have an accountant do your numbers.
I'm just going to do a little thing here. Shout out to my buddy Bo Roscoe. Know your numbers. This segment is brought to you by Bo Roscoe. I'm going to slide that in there for my buddy.
Nice.
So, anyways, go ahead. Have an accountant or somebody do your numbers.
You got to have somebody do your numbers because everything we're talking about doesn't even make sense if the numbers aren't there, right?
Yeah.
You're bleeding somewhere and you don't know it, right? So I would say number one, that's the big thing. But now, okay, say you remedy that, you get an accountant, whatever, you get to know your numbers. The next big thing that I see that is applicable to every mover is their overhead cost. It's their overhead cost. And you know what? I was preparing a marketing thing for ProMover, and I started thinking through administrative labor, right? Mm-hmm. And this fact kind of hit me, and I wrote it down because it just literally blew my mind. You have to make an administrative employee, okay, mm-hmm. has to generate the company 3.6 times the money that a direct labor employee has to generate, right? Wow. And so we see a lot of moving companies. The big issue comes into play around $1 million, just over $1 million, when the owner massively steps back from doing billable time in the company,
right?
And they're doing administrative time. Previously they were on the truck doing moves, taking calls, doing administrative work, doing billable hours while they're doing that, right?
Yeah.
Now they step back and they have to make 3.6 times their wage in sales just to make up for that, right? And so if you're not looking at your overhead costs from a perspective like that, that's where you're going to have issues. And so that's why I say overhead cost, bar none, is the biggest issue.
Yeah, it's and this is a high overhead industry, so it's that's a tough one.
It is.
So, are there any other struggles, or do we want to move on to what else we should be doing?
I would say, and we kind of mentioned this, one other struggle is the ebbs and flows of the sales, right?
Yeah.
And that's a self-inflicted struggle, right? Because again, moving company owners I would venture to say every one that I have met is a salesman. They're starting it from nothing. They're doing it themselves. They're entrepreneurs. They're go-getters.
Yeah.
I love that.
Yeah.
But, you also need somebody on your team that's going to be like, okay, well, how do we take the money we are making and actually take it home with us?
Right.
So evening out your sales throughout the year and being able to capture higher gross margin when there are more sales to be had in the summer, that's another massive thing.
And I really like that point, evening out your sales. And we've talked about this a lot since I've been in the industry for over a dozen years, but it's always geared towards how do I get my sales in the winter up to even out my revenue? Maybe we should do more O&I. Maybe we should do more senior moving because those have a flatter demand curve, whatever it is. But what you're talking about is different. You're saying flatten it out by throttling yourself in the summer to keep your overhead low. And then naturally, you're just going to have to say no a lot more in the summer, but naturally that's going to flatten out that curve for you. That's really what you're saying, right?
Absolutely. And this is where a lot of looking at your sales numbers comes into play, because what you don't want your leads to drop, right? In the summer, let's say you're having, I don't know, let's say you have 1,000 leads in the summer normally. Okay, now you get into the summer now and you're looking to say, okay, let's do what these guys are talking about. Let's try to increase our margin. Okay. If your leads are dropping from 1,000 down to 500, then this isn't going to work, right? But if your leads, are staying the same, you have good SEO, good ads coming through, whatever, good leads coming through. If you can take those leads and start getting lost leads because of price, right? Now we know we're losing these leads and these jobs, not because our operation's bad, not because of our reviews, not because of any of this stuff. We're losing it because of our price. Well, how can we turn that up just enough to make it hurt a little bit, right? So we can walk away with the most moves. Now you don't want to be doing a low volume and reduce your volume to the point where you have to go back to putting 3 guys in a 2-man job, right?
Right.
But you definitely want it to hurt a little bit because
Yeah.
you want to take the most margin you can, right?
That's such a great point. I would love to stick on that a little bit more, but we're going a little over. So
I figured.
the last thing we'll end with here is, so what are some things, or what's one thing that you think all movers should be doing that you don't see a lot of movers doing?
Interesting. What is one thing that movers should be doing that I don't see a lot of movers doing?
Yeah.
I don't see, I should say this. I see a lot of our clients doing it now because they have good numbers. Mm-hmm. Every single client that we bring on that was not previously with us, that we bring on, they are not using their numbers to make decisions. They're using their emotions. They're using their intellect, which has served them well to a point.
Yeah. Got them to where they are.
Once you get in the major leagues, you have to start having some sort of advantage. And if you don't know your own company's numbers, there's no way you're going to survive. No, especially in this downturn, no way.
Yeah.
So I would say number one is people are not using their numbers to make educated decisions. Number one.
That's a story told over and over again with movers. We're everything but the finance side of the equation for business, right? We're hustlers. We're doers. We'll get the work done. But, for most movers, that finance side of the equation is definitely a struggle. And I don't know if it's the way we're hardwired or what, but hell, I have an MBA and I still struggle with that side of things. And, I know how to look at the numbers and all of that, but looking at them and knowing them are two very different things.
For sure. I've been in accounting for, over a decade, and I'm still learning new things. So when I see a company that wants us to just come in and do analysis and they're going to do the bookkeeping on their own, I'm not interested, because I know how difficult the numbers can be. It's hard enough to know how to read the numbers, let alone put the numbers together, right? So,
that's right.
So knowing your numbers alone is a feat that if a moving company knows how to do that and knows how to analyze their numbers, you're going to be ahead of the game, right? Yeah. And we try to make that easy at ProMover. We try to make it so that anybody can just kind of look at the numbers and it kind of tells them what to do, right? That's what we want to do. But if you don't have that and you have a bookkeeper somewhere else that's doing it, if you're not getting information from it, you're only doing your bookkeeping for your taxes, which is really an injustice to yourself.
Yeah. Man, Brock, I'd love to just keep going with this because I'm getting a lot out of it. But hey, so once again, we've mentioned this a little bit, but Brock, ProMover Accounting, you only work with moving companies. You know them inside and out. You know all the details and the metrics and things that people should be looking for and what moving companies need to be looking for in their numbers. So, and you provide the bookkeeping service and the accounting service for moving companies. If somebody wanted to strike up a conversation with you, maybe talk to you about utilizing your services, how would they do that?
Yeah, so definitely Instagram's a great place. I'm always looking at the messages directly from there. It's at ProMover Accounting. Our website is great, and actually there's like a button at the top that says schedule a meeting, and that goes directly to my calendar. So, a lot of our clients are able to use there and get meetings where I'm just meeting with clients. We're doing financial analysis together. Or, if people want to hear a little bit more about us and see if what we do is what they need for their moving company, great place to go. ProMover Accounting.com and schedule a meeting with me. We'll sit down and see what we can do to get you some information. So
awesome. Well, hey, listen, Brock, thank you for that. Really appreciate the conversation. Appreciate your insight. Thank you for being here. Thank you for taking the time. I hope people get a lot out of it. I know I have with between this and your presentation with the New York State Movers was fantastic and really, really affected me. So glad we were able to get you on here. Once again, appreciate you. Thank you for being here.
Thank you. Absolutely.
All right. Well, thank you for listening to my conversation with Brock. I hope you enjoyed it. Once again, we went a little bit longer than our goal here, but I really enjoyed the conversation. I got a lot out of it. Brock has got a lot of insight and knowledge, so really appreciate him coming on. So thank Brock. Thank you guys for listening. Hope you enjoyed it. If you're looking for more from Brock or you'd like to talk to him, pick his brain, have a conversation maybe about joining up with ProMover Accounting, the best way would be to go to ProMoverAccounting.com and schedule an appointment with Brock and have a conversation with him. Once again, we appreciate everybody listening and taking these podcasts in. Once again, it's not just on YouTube. If you're enjoying it on YouTube, just know that there are other options out there, whether that be Spotify or Apple Podcasts. Really appreciate everyone. Hope everyone had a great new year. Now that the holidays are over, get moving.